Hello, everyone, and welcome to a new episode of Blockchain Talks. I'm your host, Dimitri, from Gracious Interests. Now, in this episode, we will be talking about the recently filed spot Bitcoin ETFs by Blackrock and Fidelity. Now, this is an educational video to learn you guys about what exactly is an ETF. And I will also highlight why I'm quite reserved about these changes by these filings of the ETFs. Some of you who follow me on Twitter and social media will have noticed that I'm not very particularly positive or bullish about the filing of these ETFs. More on that in this video. Let me start sharing my screen here before I jump into the main meat on what is occurring. Let's take a little look at the current state of the market and do perhaps, I'm not going to say prediction on where it goes, but you guys got a decent idea how everything will be going. There we go. I'm on CoinGecko here. Bitcoin doing quite well, currently priced in at 30.5K, so it's doing a very nice little bullish run. What we can see here is quite a lot of volatility, especially today in the last couple of hours. People buying up and aggressive sell, so there is some high volatility going on, meaning some recent news probably broke that I haven't seen yet that might have indicated this one, or certain short positions have finally been made and, well, liquidated. Sideways action, as you guys can see, last week there has been quite a lot of volatility going on, especially here on Friday, closing of the week. Sell off before we push back above 30K. So it seems on the weekly that our support level is at around, well, between 30K and 30.250 range. Let's zoom out a little more as to see how the market's reacting. And as you guys can see, the last 2 weeks we had a nice little surge going on, all as a result of the proposed Bitcoin ETFs by BlackRock and Fidelity. And we are currently at a stable, higher level, higher trading range. Now, as you guys know, I always say, in case of doubt, zoom out. So we go towards 30 days. You guys can see here. For that, also some sideways action with a little bit of volatility here, but your range trading at around 26K for suddenly surging up in thanks to the filing of the Bitcoin spot ETFs. Last 3 months, I can clearly see it isn't the first time we've crossed 30K. However, we are currently trying to establish a higher trading range here. Especially in the last couple of months, there was a little bit of a bearish downtrend, some corrections going on as we came from higher trading ranges, fell back, liquidations occurred, filing for BTC ETF spots, and currently we are at this level. We still have yet to see if it can remain sustainably so above this 30K level. Few retests, as you guys can see here, have been occurring, and each time we went straight back up. So position seems to be quite strong. Actually, half a year, beginning of the year, nice little bullish run. Would I say it is a bullish run? Not exactly. Let's not forget that the US dollar and plenty of fiat currencies are dealing with hyperinflation. So I'm a bit surprised here on the yearly basis. We are already pushing 30K, in my opinion, and I've written it in my Telegram channel, link down below on one of the posts. I said, look, technically, I'm maintaining we are still in a bear market, that we should be going sideways. So why the hell is everything going up? And the answer is quite simple, hyperinflation. In my Telegram channel, I get deeper into it. Anyway, let's head on over to the real main meat of this little live stream episode. And that's this. BlackRock files for Bitcoin ETF in push into crypto. Launched, written about June 16th. Filing itself was at June 15 approximately. So if you take a little look here, you guys can clearly see it was issued right here. And since then, we went nicely up. This is due to BlackRock, and naturally, there's Fidelity and others who joined in on it. Anyways, the news article from Reuters. BlackRock, world's biggest asset manager, on Thursday filed for a Bitcoin exchange-traded fund that would allow investors to get exposure to the cryptocurrency, as the asset class comes under intense regulatory scrutiny. We all know about the SEC and its current mission in filing a variety of lawsuits against central exchanges and a variety of cryptocurrency projects. So that's what the asset class under intense regulatory scrutiny means. BlackRock's iShares Bitcoin Trust will use Coinbase custody as its custodian, according to a filing with the U.S. Securities Exchange Commission (SEC). The U.S. regulator has yet to approve any applications for spot Bitcoin ETFs. That's a very important given here. As soon as we indulge into what ETFs exactly are, you will understand their reasoning for it. I will explain it in more clear, concise terms. Last year, BlackRock launched a spot Bitcoin private trust for institutional clients in the United States. Move comes at a time when the global cryptocurrency industry has been caught in the crosshairs of the U.S. securities regulator on alleged violations of security laws. Earlier this month, regulators sued major exchanges, Coinbase and Binance, in high-profile lawsuits that reverberated through the digital assets industry. The fact that BlackRock, a well-respected and established asset manager company, has filed for a Bitcoin ETF could be seen as a positive development in the quest for regulatory approval, said Joshua Shu, Group Chief Risk Officer at blockchain technology group XBE, don't know how to pronounce it, Coinelectables, and Marvion. It also shows resilience to the public interest in crypto, yada yada yada. That's the entire article. Like I said, Fidelity joins the rush for Bitcoin ETF, following BlackRock, ARK Investment, and others, June 29th, so this week. This generally highlights what we all know. BlackRock is paving the way. Others are following suit. For those of you who have been on social media during the last couple of weeks, will have seen a variety of theories going around. On one occasion saying, look guys, we know BlackRock, Fidelity, and the others are now pushing for it. By reason, well, the various lawsuits have been pushing the price down, which might hold a certain grain of truth here. By reason, we could see there was bearish sentiment, and I mean, this was the period we were going down, and then suddenly, oh yeah, we are filing for a Bitcoin spot ETF, whoop, and everything went up. I mean, it's quite clear. Most important here, Katie Wood's ARK Invest filed for changes to its proposed Bitcoin fund Wednesday that brought it closer in line with BlackRock's application. So currently, all investment firms are aligning themselves with BlackRock in the hope of pushing through a spot Bitcoin ETF. It's one important notice. Let's continue. It's one of the tweets I made. Don't you get it? They won't approve a spot Bitcoin ETF by reason that it could strengthen Bitcoin positions. Leveraged and short ETFs for Bitcoin are being approved as it allows for streaming into USD or US dollar. This is all about safeguarding a failing USD. This is a tweet I made quite recently on the grounds that, well, Coin Bureau came out with the article last week on June 24th, 2023 here. So that where it said that the SEC isn't going to approve a spot Bitcoin ETF on the ground that it's open to manipulation, but they will allow numerous ETFs, a short ETF, and now a leveraged ETF. Those are all Bitcoin ETFs which are already being approved However, spot BTC not really being pushed through. And this is my answer, and I cannot state it more simple. We shall learn more about ETFs naturally later on, but leveraged and short ETFs, it all comes down to trading. And leveraged and short ETFs allow for money to flow out of crypto more easily and strengthen the US dollar, whereas a spot Bitcoin ETF, well, that's actually empowering Bitcoin. More on that later. I'm going to keep these tweets open because I will be referring back to them later on. See plenty of influencers proclaiming Bitcoin bull run is back, millions pouring into Bitcoin, 220k Bitcoin in the works. Those are all claims that I saw passing by last couple of weeks since the filing. But let's be fair, Blackrock, Fidelity, and others applying to launch a Bitcoin ETF sounds bullish. It still needs launching and approval. Chill out. And I made this tweet, and I believe a few hours later, or even a few days later, this article popped up. SEC pushes back against Fidelity BlackRock spot Bitcoin ETF filings. It will refile on behalf of Fidelity, has jumped in value amidst latest wave of ETF filings. So what occurred? Well, exactly as I foretold in my tweets. The SEC was pushing back against a spot Bitcoin ETF. By reason, well, despite all this bullish news of BlackRock and Fidelity jumping on ETFs, filing for them, for the spot Bitcoin ETF, filing them, they still need approval of the security and, of the SEC, I'm going to say, of the Securities and Exchange Commission. Naturally, the SEC isn't really all too hyped about cryptocurrency, and especially, well, where it concerns things that might weaken the US dollar, hence my little tweet here. And it is exactly as I told. They pushed back and they said, look, for approval, it is inadequate. You need to refile, make changes. And what was one of these changes that needed to be made? Well, it's being written here, so you guys can read with me. So this is the important part. Come on. It's what the official answer is, that the filing in themselves are inadequate, being not clear and comprehensive. In short, a SEC needs more descriptive detail around the proposed provisions to be able to make a judgment. Proposed provisions means on which platform or what kind of company or which platform will offer these spot Bitcoin ETFs. And quite frankly, changes were made. Now, before I indulge into, I'm going to take a quick peek here. Yeah, that's the explanation. Before I begin, I want you guys to know something very important, something very dear to my heart. And that is one of the main advices that I tend to give to anyone involved in the crypto sphere. It doesn't matter if you're a hardcore Bitcoin maximalist as I am, or if you trade a variety of altcoins. But you have two types of investors that concerns cryptocurrency. This is the main website. And I explain it here in a little blog entry I made last year. All will depend on the kind of investor. There are two distinct families of investors for Bitcoin. You have the speculators, with this family of investors only caring about the value of Bitcoin and how it will evolve. And with that, I mean how the value of Bitcoin will evolve. Hence, long ETFs, short Bitcoin ETFs, etc. They place bets on how the value of Bitcoin will evolve, be it up or down. These kind of investors encompass day traders and people who trade the various Bitcoin ETFs and options in hopes of making quick money. Seldom do they hold actual Bitcoin. The brokers and exchanges through which they trade holds the Bitcoin. Now, there's one important given I am reading up here, and I need you guys to understand this very well. Bitcoin ETFs, and seldom do they hold actual Bitcoin. As I am going to explain the ETFs, keep that in mind. It's a little giveaway, so you might assume already or know that ETFs, well, you're not going to really be trading Bitcoin. The holders, that's another family of investors. Family of investors hold actual Bitcoin for the long term. I am a holder. They exchange their fiat money or altcoins or both for Bitcoin. They buy and hold. Many of these type of investors heavily care about Bitcoin and see the added value it brings when compared to the classic financial system. The Bitcoin miners will make part of this family of investors. They care about the Bitcoin network and understand its strengths. The holders care the most about Bitcoin and what it represents. The speculators lack the Bitcoin or crypto mindset and generally lack any understanding about its fundamentals. They generally don't care at all and only want to leverage money out of it. That's a very important given. As I said, the investors tend to work with ETFs. They generally don't care at all and only want to leverage money out of it. This is my free Telegram channel, few links, but catch my drift. I'm giving away here what ETFs truly are and why I'm not all too hyped about the filings. And if you want a few hints, I mentioned them before. Leverage, and naturally, you're not trading with real Bitcoin. Now, let's get deeper into what is an exchange traded fund or an ETF. An exchange traded fund, I'm just going to read it aloud here for you guys and give some background information just to make everything clear. An exchange traded fund is a type of pooled investment security that operates much like a mutual fund. Typically, ETFs will track a particular index, sector, commodity, or other assets, but unlike mutual funds, exchange-traded funds can be purchased or sold on a stock exchange the same way that a regular stock can. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETFs can even be structured to track specific investment strategies. So, what does this mean? Well, it's a derivative. What this definition says is that it's a pooled investment. Say, for example, you invest in Tesla stocks. By holding the stocks, you own part of the company. Now, if you hold a Tesla ETF, you're not holding the stock itself. You are holding a pool whereby the value of such ETF tries to emulate the Tesla stock. You're not holding the stock itself, you are holding a derivative off of it. That's basically what this definition is saying. All the key takeaways. An exchange-traded fund is a basket of securities that trades on an exchange just like a stock does. ETF share prices fluctuate all day as the ETF is bought and sold. It is different from mutual funds, which only trade once a day after the market closes. ETFs can contain all types of investments, including stocks, commodities, or bonds. Some offer US only holdings, while others are international. ETFs offer low expense ratios and fewer broker commissions than buying the stocks individually. This last sentence gives away what I was talking about. You are not buying the stocks. You are buying a pooled investment, a derivative. ETF is called an exchange-traded fund because it's traded on an exchange, just like stocks are. The price of an ETF shares will change throughout the day, trading as much, yada, 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 that we already know. Here comes the big part. An ETF is a type of fund that holds multiple underlying assets rather than only one like a stock does. Because there are multiple assets within an ETF, they can be a popular choice for diversification. ETFs can thus contain many types of investments, including stocks, commodities, bonds, or a mixture of investment types. In short, if you're going to work with an ETF, you are not holding the actual thing itself. If you are going to start trading with a Bitcoin ETF, you are not holding factual Bitcoin. You are holding a variety of underlying assets. It might be some Bitcoin which is being held on an exchange, in combination with a variety of stocks, perhaps some precious metals, perhaps a few commodities, all added up in order to emulate the price of factual Bitcoin. But you are not holding actual Bitcoin. This is a very important thing to know. It ties in Bitcoin with, well, the classic market, but at the same time, it allows for leverage, just as I have mentioned here. ETF can own hundreds of thousands of stocks across various industries, or it could be isolated to one particular industry or sector. Some funds focus only on US offerings, that we already know. Cash invested in ETFs, quite frankly, you see here, becoming more and more and more important. That's expressed in trillions, so $9.94 trillion. Tends to correlate quite nicely with the current inflation rate of the US dollar, even with the little dump here during the 2008 economic crash. That becomes very interesting. You have a variety of types of ETFs. Let's go through them. You have passive and active ETFs. Well, you guys can read it here on screen. ETFs are generally characterized as either passive or actively managed. Passive ETFs aim to replicate the performance of a broader index, either a diversified index such as the S&P 500 or a more specific targeted sector or trend. An example of the latter category is gold mining stocks. As of February, there are approximately 8 ETFs which focus on companies engaged in gold mining, excluding inverse, leveraged, and funds with low assets under management, AUM. Actively managed ETFs typically do not target an index of securities, but rather have portfolio managers making decisions about which securities to include in the portfolio. These funds have benefits over passive ETFs, but tend to be more expensive to investors. We explore actively managed ETFs below. Now, what's the giveaway here? Passive ETFs aim to replicate the performance of a broader index, either a diversified index such as the S&P 500. That's an important given. Meaning, well, a passive ETF takes a more holistic approach. If you know what the S&P 500 stands for, you will know that a variety of stocks are involved in the S&P 500 index, meaning it fluctuates depending on the various industries which it envelops. What is an active one? Well, here it is, as they have mentioned, it focuses more on a specific industry. In this case, they were talking about gold mining, but Bitcoin is going to be an active ETF because it envelops the crypto industry. But where is it here? Wait. ETFs which focus on companies engaged in gold mining, excluding inverse, leveraged, and funds which with lower assets under management. Okay. Here it is. Do understand a Bitcoin ETF is going to be an active ETF. And as written here, but rather have portfolio managers making decisions about which securities to include in the portfolio. They have benefits but tend to be more expensive to investors, meaning there will be portfolio managers where it concerns the Bitcoin ETFs. This is less important, not bond or stock ETFs. This is slightly more important. Industry or sector ETFs are funds that focus on a specific sector or industry. For example, an energy sector ETF will include companies operating in that sector. The idea behind the industry ETFs is to gain exposure to the upside of that industry by tracking the performance of companies operating in that sector. Bitcoin ETFs open the door towards a crypto industry ETF. It's a little index so that you guys can follow. And one example is the technology sector, which has witnessed an influx of funds in recent years. At the same time, the downside of volatile stock performance is also curtailed in an ETF because they do not involve direct ownership of securities. Industry ETFs are also used to rotate in and out of sectors during economic cycles. Do you know what this means? Bitcoin ETF opens the door to crypto ETFs, which is industry and sector ETFs. And what this little sentence doesn't directly say or indirectly mentions is leverage. Leverage is bad, very bad. It implies people can start to speculate and leverage money out of crypto, meaning that they can leverage money out of your active portfolio where you hold the actual tokens, and people who trade with the ETFs, well, they can, without owning anything in the crypto industry, not a single altcoin, not a single Bitcoin, can leverage money out of it. That's what this sentence is saying with an industry or sector ETF. Bitcoin ETFs can fall under this type. See, commodity ETFs, that's the next one. As their name indicates, commodity ETFs invest in commodities, including crude oil or gold. Commodity ETFs provide several benefits. First, they diversify a portfolio, making it easy to hedge downturns. Yada, yada, yada. What do we need to know about this one? Apologists will say, yeah, but Bitcoin is going to be a commodity ETF. It can be the case. But what you guys can now see, you've got industry and sector ETFs, where Bitcoin falls under. Same can be said about commodity ETFs, by reason that the US Securities Commission did mention that Bitcoin is to be considered a commodity. Hedging downturns, etc. Bitcoin can also be seen as a currency, and it can be thought as a currency ETF, which are pooled investment vehicles that track the performance of currency pairs, consisting of domestic and foreign currencies, BTC USD pair. Giving a hint here. Currency ETFs serve multiple purposes. They can be used to speculate on the prices of currencies based on political, economic developments of a country. They're also used to diversify a portfolio or as a hedge against volatility. Forex markets by importers and exporters. Some of them are also used to hedge against the threat of inflation. There's even an ETF option for Bitcoin. Here it is even mentioned more clearly, giving perhaps people the idea that Bitcoin is going to be a currency ETF. But as mentioned, it can also fall under commodity ETF or an industry. Perhaps various filings will spread and give rise to the creation of multiple ETFs tied to the crypto industry and not Bitcoin alone. Key giveaway is it's still leverage. And you have inverse ETFs, leveraged ETFs, how to buy. That's everything we already know. Let's get slightly deeper into this. The Bitcoin ETF combines two prevalent forms of investments, ETFs and cryptocurrencies, into one package. The Bitcoin ETF aims to track the Bitcoin price, exposing investors to the digital asset without themselves directly holding the physical asset. As I said, and it's being repeated here, exposing investors to the digital asset without themselves directly holding the physical asset. Once again, if you are going to trade a Bitcoin ETF, Doesn't matter if it's a long Bitcoin ETF, short Bitcoin ETF, futures Bitcoin ETF, or even a spot one. You're not holding the physical asset itself. Now, I know there will be dorks who will be saying, yeah, but Bitcoin isn't physical. You know what I mean. You do not have the asset under your own control. It is being saved somewhere with a plethora of other assets by a third-party platform. That's a dangerous thing. And as I mentioned on what the various ETFs are, see previous page here, and where Bitcoin can be located, the most important and the one thing I'm stressing out here is that the Bitcoin ETF allows for leveraging money out of the cryptocurrency and out of Bitcoin network and industry. Bitcoin ETF. When investors refer to a Bitcoin ETF, they are usually referring to a spot Bitcoin ETF. A Bitcoin exchange traded fund is an investment vehicle that seeks to track the price of Bitcoin. Bitcoin ETFs are traded on traditional regulated security exchanges and are not available on cryptocurrency exchanges. So it means you cannot trade them on something like Binance, Coinbase, Kraken, Bitwavo, and many others. The Bitcoin ETF offered in Australia is regulated by Australian Commission, so that's something local. How does Bitcoin ETF work? Now, do know that BlackRock, Fidelity, ARK Investment currently have been filing for spot Bitcoin ETF, so I'm going to open this one up as it is the most hyped up version to date. There we go. Spot Bitcoin ETF is backed by physical Bitcoins that underpin the value of the ETF. If the value of the digital coins backing the ETF rises, the value of your investment can generally be expected to increase. In simple terms, if the price of Bitcoin increases, the investment should too. Needs to be highlighted. A physically backed Bitcoin ETF is the most direct way of investing in Bitcoin without buying Bitcoin on a crypto exchange and holding the coins. In this case, the fund holds them. It's very important to stress out. There are some negatives though. For example, investors are limited to trading on ETF within traditional market hours for regulated securities exchanges, unlike crypto markets, which trade 24/7. That indeed is a negative. Bitcoin is permissionless, is trustless, works peer-to-peer, and you can exchange it 24/7. At any hour of the day, any second, any minute. However, what he fails to write down here, but is subtly implied, and you might say, yeah, but this one negates your previous arguments. Not really. Because in the second sentence, and to highlight it here, third-party platform is holding the Bitcoin. It implies there's an active ETF going on with a spot Bitcoin ETF. It implies there's a portfolio manager. It implies if you buy or trade with a spot Bitcoin ETF, you're still not trading or buying and selling actual Bitcoin. You are trading a derivative whose backing is naturally with Bitcoin, but the Bitcoin itself is being held on a third-party platform. Rule number one, when it concerns security of your crypto funds, self-custody rules prime. Up here, you're not holding your Bitcoin. You are dependent on the underlying broker, on the underlying platform to keep it backed one-on-one. And let me remind you guys what occurred in the bear market of 2022 with FTX, Three Arrows Capital, with Celsius. There was, with their stablecoins, no one-to-one backing. They were over-leveraged. And it's not because BlackRock and Fidelity are filing for spot Bitcoin ETFs that the backing is going to be one-on-one. There are enough holes anywhere in any country in the law that allows them to over-leverage, that the backing doesn't necessarily need to be one-on-one with bitcoins held. No, they can add a variety of other digital assets underneath it. For example, they can say, yeah, it's backed by physical bitcoins. Yeah, but Bitcoin, or is it going to be wrapped Bitcoin? Wrapped Bitcoin made available on the Ethereum blockchain, or is it going to be something else, like a little other ETF or a little other derivative from, for example, Bitcoin Cash, which isn't the actual Bitcoin, but taken right into custody, mixed up a little bit, whereby people can say, still Bitcoin. See what I'm aiming at here? Most important part here is see what occurred with Three Arrows Capital. See what occurred with FTX and backing of their stablecoin. See what occurred with Terra Luna and their stablecoin. There was no one-to-one backing. There were aggressive buy-ups before everything went crashing down and, well, the market corrected tremendously. That's spot Bitcoin ETF things that are occurring. We did not celebrate the crashing of Terra Luna. This is the exact same thing reoccurring again. It's a disaster in the making, perhaps more sustainably so than Terra Luna. But in the end, the mechanism, the build-up, remains the same. And it's one of the reasons why I remain opposed to ETFs. It's one of the reasons why I am in agreement with the SEC to reject ETFs where it concerns Bitcoin. However, sad part is they did allow for short and future Bitcoin ETFs. What are these? Well, let's read it up here. A Bitcoin futures ETF does not hold any Bitcoin as the underlying assets. Very important. Instead, the fund holds future contracts over Bitcoin instead of the actual coin. What does it mean? Quite simply, they do not hold Bitcoin as the underlying asset. It's a mix of other assets. A futures contract potentially allows investors to profit from the rising prices through an agreement that sets a fixed price and a future date for delivery of an asset, or the cash equivalent in value. In short, it's betting. That's basically what it is. It's betting if the price goes up. That's a Bitcoin future ETF. As a futures-based Bitcoin ETF does not hold Bitcoin, it is not directly exposed to the risks associated with storing the cryptocurrency. Meaning, what they try to tell you here is that, yeah, if it goes down, no worries, you're not losing your investment funds by reason Bitcoin went down. No. The thing remains the same. You see, if a future-based Bitcoin ETF goes down, there's really no risk. As a matter of fact, the risk remains the same. You are still losing money. So it's a little bit sketchy talk here. Investing in Bitcoin futures can result in Bitcoin futures trading at a premium or discount compared to the spot price, largely due to the process of rolling future contracts at regular intervals in order to maintain investment exposure, which can result in gains or losses to the investors. Basically, as I said, you are betting that the price goes up. Now, during a bull run, Bitcoin future ETFs gives plenty of money. Great thing of beauty. But after each bull run comes a bear market. And everyone who was longing on Bitcoin future ETFs, well, they got tremendously wrecked during a bear market. And it did not matter if you held actual Bitcoin or were trading with Bitcoin futures. As a matter of fact, I will even say this: those who were dealing with Bitcoin future ETFs had immediate realized losses. If you held Bitcoin, if you hold it long enough and do not sell, you do not have realized losses. You have virtual losses, meaning your investment became less worth. But if you hold on long enough, and I'm really going to compare here, say you bought Bitcoin at the top in 2018 at 20K, yeah, okay, market corrected, it went down, but if you held until now, there's no realized losses. You're making profit. See, that's where the difference is. You have a much bigger risk dealing and trading with Bitcoin future ETFs than holding the actual coin. So there's a little bit of bullshit being shared here in the text. Approvals. Now, let's list them up here. Advantages and disadvantages of a Bitcoin ETF. Spot Bitcoin ETF. Advantages. Investors can gain direct exposure to Bitcoin without having to sign up to a crypto exchange or create a wallet. By reason, you do not own Bitcoin. To me, that's not an advantage. That's a disadvantage if you're really smart financially. Say portfolio diversification. Same applies by holding real Bitcoin. Just a hint. Investor protection regulation. Rather than investing in an unregulated off-market crypto exchange, investors in a spot Bitcoin ETF benefit from investing in a regulated product issued by a licensed issuer. They want to give you the impression it is more safe. In my book, and that's also one of the most important rules in crypto, self-custody rules prime. You can buy on exchange and you can immediately transfer out of the exchange and hold it on a nice little hardware wallet. Self-custody rules prime. By reason, well, no one can steal or get to your funds. You cannot lose them unless you lose your private key, but it's entirely on you. So you might say, yeah, okay, there's a certain amount of security. I'm going to say no. Because here they are trying to convince you that a third-party platform and keeping your funds and financial assets over there is going to be much safer if you don't tell anyone you have those assets and are keeping them safeguarded at your own home. If you do not tell people you have Bitcoin or even gold stored at your house, there's not going to be much of a chance that people will come and steal it. On the other hand, if you keep it on a third-party platform, well, if that platform or even the broker goes broke, your funds are lost, and that implies a certain amount of security that is lacking. On the other hand, if you are storing your Bitcoin or gold yourself, well, the security that is present entirely depends on you. And quite frankly, I trust myself more than other people. I know my capabilities, I have my technical know-how. So on that account, it's not really an advantage, even though they try to sell it. Hold your real coins. Do not trade with a spot Bitcoin ETF. Disadvantages: there are restrictions on trading hours with traditional exchanges, unlike crypto exchanges that operate 24/7. This is indeed a disadvantage if you're just in for trading for the money. Bitcoin, like I said earlier, you can't have realized losses if you keep on holding and just wait until the price is right again. Up here, you are restricted in time. Anyone that has been on Forex and have actively traded will know there are trading hours, and that your trading paths can suddenly be halted if the exchanges close, even though you might be making a decent profit or were at the verge of making a little loss before it went back up. They say, nah, we close it down, it's over. And it happened to me a few times when I was trading on Forex, where I was investing in gold. It was with a future ETF, trying to guess the price right. Was a little downtick, and at that moment they decided to close the market, and I made a loss. My trading pair was closed down, etc. On Monday, when the markets opened back up, gold pricing increased, and had my trading pair still been active, I would have made a nice profit because it veered back up. That's one of the negative aspects of trading with an ETF. Hence why I always say hold the real deal. Do not even start trading unless you are really a professional, experienced, and have all the time in the world to focus just on that. Naturally, ETF management fees, because of course, if you're going to trade, fees will be involved for all your trading pairs and for, well, moving your trades. So yeah. Futures Bitcoin ETF may have lower management fees due to ease of setting up and locking off fees on custody and other requirements for spot ETFs. By reason you're not holding the actual ETFs, there's no active portfolio manager. By reason there's a promise that they will pay out in the future. That's basically it. Potential for decay and divergence. See definitions for these terms. The ETF does not hold physically backed Bitcoin. There are restrictions on trading hours. In both instances, you are not dealing with actual Bitcoin. Let me repeat that again. You're not dealing with actual Bitcoin. You're trading a derivative. You're trading a promise. And if you want to know how bad that can happen, I'm going to refer once again to the past towards FTX, Three Arrows Capital, Terra Luna with their stablecoin, Celsius Network. Those names, remember them well, because that's exactly what this is and the disastrous effects they can have. Something else I want to share. So yeah, got the speculators, etc. Believe I'm quite open here. So yeah, I'm going to slightly end this episode by reason, well, I've covered about everything here that needed to be said. There we go. So once again, I'm going to give a little short synopsis of what we've learned today. What are ETFs? They are exchange-traded funds. It implies that they are being backed by a variety of assets, and those assets may not particularly be Bitcoin itself. With spot Bitcoin ETF, they make the promise it is being backed by Bitcoin as a digital asset. However, it is held in custody on a third-party platform, meaning it is being held in custody by other people. You do not have ownership. You're merely trading on Bitcoin itself, its price, but you are not holding it. There's no self-custody involved, which is a bad aspect. With a future or short ETF, there's no backing by Bitcoin at all, which makes it even worse. You're trading here purely speculative, meaning there's no real feeling with Bitcoin itself. You're just betting. It's like a little casino saying, oh, price will go up, price will go down. I mean, if you are a better like Bitcoin, for BitBoy, for example, you can go ahead, but those are the kind of things which allow for leverage, and the ultimate winners are not going to be the investors in the ETFs. No, it's going to be the guys holding the asset. And it is, as I said, an ETF only allows for leverage. And I'm going to reshare my screen here because I thought of something perhaps quite important to mention here what concerns Bitcoin future ETFs. You see, in another tweet, I haven't opened it here on screen. I forgot about it. As it's being mentioned, Bitcoin Future ETF does not hold any Bitcoin as the underlying asset. Instead, the fund holds futures contracts over Bitcoin instead of the actual coin. Meaning, well, do remember earlier in this episode, I mentioned that short and future ETFs for Bitcoin were already approved. And why is that? Well, quite frankly, it refers back to this. They want to approve a spot BTC ETF by reason that it could strengthen Bitcoin positions. Indeed. If you look at spot Bitcoin ETFs, you will see that it is backed by physical Bitcoins by naturally a third third-party platform. So in a certain sense, the bullish sentiment is indeed there. By reason, well, if a spot Bitcoin ETF is being approved, you've got a variety of institutional investors becoming probably Bitcoin whales. They will need to accumulate Bitcoin, take it out of the market, less liquidity to go around, which will increase its value. But it remains in institutional investors' hands and is being refused. By reason, a spot Bitcoin ETF implies that money, fiat money, will be flowing straight into these institutional investors' pockets. And it is money that is going to be spent on Bitcoin, which is exactly what I'm saying here. By reason that it could strengthen Bitcoin positions. However, leveraged or future and short ETFs for BTC are being approved as it allows for streaming into USD, into fiat money. By reason, well, does not hold any Bitcoin as the underlying asset. Instead, the fund holds future contracts over Bitcoin instead of the actual coin, meaning a variety of assets which are non-Bitcoin try to emulate its value. Variety of assets which are tied to the US dollar, meaning they will gain much quicker approval from the SEC. By reason it's not USD that is flowing into a global industry like the crypto industry or like Bitcoin. No. It is money flowing straight into the US dollar. That's one of the reasons why Bitcoin future ETFs and short ETFs are being approved. It is detracting money from the cryptocurrency market, which is exactly what I'm saying here. This is all about safeguarding a failing USD. And if you want to know what inflation means, well, you have a little graph here. Yeah, we have a little this little graph here. Can I open it up? No, I can't. Here on screen, this little graph here illustrates the buying power of $1 over time. You can see it's going to flatline here near zero, meaning the US dollar is losing purchasing power. It's really the inverse of what you are seeing here. $1 made in 1800s equals 25 modern day US dollars. And it's exactly as I'm putting out here. All about safeguarding a failing USD. The US Securities and Commodities Commission is really trying to protect the USD dollar. That's one of the reasons why they are approving for future and short ETFs. It's one of the reasons they are delaying a spot Bitcoin ETF. The reason why they refused to make or approve one in the past. Now with BlackRock behind it, chances have increased. But rest assured, the SEC will try everything in its power, every legal loophole, every legal backdoor to delay approving a spot BTC. And with the article I've shown here, they are actively pushing back. They do not want to have it by reason as expressed here. Spot Bitcoin ETF is backed by physical Bitcoins, meaning that US dollars are flowing into Bitcoin through institutional investors who will become whales. It implies that it will affect the USD or the US dollars purchasing power in the long run. With that, I'm going to end this episode. Second time I'm saying this. And all I can say is thank you guys for watching. Hope this was an educational video so you guys know better what is going on and why exactly I am very against Bitcoin ETFs, be it spot, short, or futures, by reason it is leveraging money out of the ecosystem and isn't really a sustainable thing to do so. Perhaps on the short term, but on long term, it allows for leverage and, well, even more volatility that can occur. I'm going to repeat one of the basics here concerns crypto and Bitcoin: self-custody, peer-to-peer transactions. Keep it anonymous. Keep everything on chain. Do not trade with derivatives such as the various Bitcoin ETFs that exist. And with that, guys, I thank you all for watching. If you like my videos, naturally, please like, subscribe, leave a comment down below, reach out to me on social media. And if you have a variety of questions, just reach out. With that, thank you for watching, and up until next time, bye.